why Australians should really invest back in the Australian property market.
Rent where you want to live and buy where you can afford. I think that an expat is the perfect anecdote for that.
All right, good morning. Welcome to the first podcast of Wealthi Expat. I'm Chris Hynes. With me today is Domenic Nesci, one of the co-founders of Wealthi. We'll be doing a lot of work with one another, helping the Australian expats invest in property back in the Australian real estate market. Domenic, it's a pleasure to have you here today, and I look forward to the chat we're going to have.
Mate, it's so good to be on this show. Wealthi is now international. You're leading it all over there in the UK. So thanks for heading it up. We appreciate you starting the podcast. There's lots and lots of good things for us to talk about.
That's it. It'll be great. I'm looking forward to it. Looking forward to working with you guys as we continue to grow the team over here as well. And big things to come, I think. Very big things to come. So look forward to it. I guess first and foremost, we should get into why Australians should really invest back in the Australian property market opposed to the UK market. I guess you've still got not to say the UK property market's a bad place to invest for an Aussie, but there's certain implications and tax restraints that we won't go into. But if you could give us a little rundown on what you're seeing in Australia at the moment, and a few reasons, I suppose, as to why you believe that investing back in Australia is a good thing to be doing at the moment.
Well, look, I mean, if there's lots of good options. I think if you're investing, great. Let's start there. I think that UK certainly is a good market to invest in, but I think for a lot of Australians, expats, it's hard to look past Australia, investing back at home. The Australian property market over the past 6 months has absolutely pumped, and the growth that we've had has been all internally stimulated. So we haven't had really any outside influences. Unlike the rest of the world, we've been completely isolated. Borders have been closed, and the market has run through a couple of main reasons. One, credit is really cheap at the moment. You can go and get a loan for as low as between 2 and 3%. As an Australian, that's a person that is an Australian buying back home, you don't get hit with any crazy stamp duty concessions and things. You can effectively just go and buy a good quality investment with relatively low deposits. And the market has really kicked off because of owner-occupiers. It's just people that love Australia, that want to get out of renting and buy their first home. For the last sort of 3 to 4 months, it's been largely owner-occupiers that have been pushing the property market the hardest. And only recently have we seen investors step into the market, which has created an internal sort of demand and a friction between the two and further demand and pushing the prices even harder. So CoreLogic just the other day just came out with the rates, and basically Sydney performed by about 10%, Canberra performed by sort of I think 15% Brisbane, your old hometown, grew by 10%. Melbourne grew by 5%. It's a lot of monies. If someone had spent $500,000 and bought a nice house or a small unit or something, 10% growth is $50K. So no small chunk of change.
Exactly. You take it any day of the week. It's interesting what you're saying about the change in these prices. It was in particular Brisbane. My mum obviously is still up there with the families in Brisbane, and she's renting at the moment. She's noticed a massive shift of people from Sydney and Melbourne moving up to Brisbane to buy a more affordable house and have a better standard of living, you could say. And it's almost pushed her out of the market now. So she's struggling from that sense. But it's interesting to see that there is that massive shift. Yeah. So she's just getting pushed out now. Well, she's decided she's going to go to the coast.
We scour a lot of data. So I'm just pulling up the report as I'm chatting to you, Chris. And we saw some census data recently that basically Brisbane was the main, or Queensland in particular, Brisbane was the main capture for all internal migration. Brisbane lost, Sydney lost like 6,000 or 7,000 people. Melbourne lost another sort of 6,000 or 7,000 people, and Brisbane captured a lot of the internal state migration. And as you've just said, it's a lot of these larger, more expensive markets that have been coming to Brisbane and pushing up prices. So that's really good anecdotal information.
It's very interesting to know. And I guess you can say the same for the UK now. If we're talking about the UK versus Australia, we've seen people in London, especially over the pandemic, move out of London and move into the countryside of places like Manchester, Liverpool, Leeds, so that they have a better standard of living, so to speak. And the areas of gentrification now, there's massive infrastructure projects happening in these smaller cities, you could say, in the UK. So there has been a massive shift to the north, or even down to the coast, down south. So it's interesting to see, watching the people move and watch where the infrastructure projects are, and things are happening. There's change happening, and the way in which we live now, I think, is different. We have, it's not so much about 9 to 5 in the office. You have that work from home in the UK now. I'm sure it's the same in Australia. There's that shift in the in your work day and your work pattern, and people want to be able to enjoy things that they love doing, being more accessible to those things. So there is that shift away from the major cities, which is interesting to see.
Well, what you've said there's pretty interesting, and I think, we're seeing that in Australia too, where people are, for the most part, moving out of major metropolitan areas, and they are investing in regional centres. So, regional centres move fastest and the hardest compared to the rest of Australia. They led the charge. And it's, again, back to what we were saying. So it's a lot of internal demand that's driving price at the moment. Where I see opportunities for Australian investors, for Australian expats to buy back home, is that we're isolated at the moment, and we have a hypothesis in the office where, soon as the borders open back up again, we're going to see a hell of a lot of investment flowing into our small little country. Where we expect the flows to happen is migration. So we're currently getting near no migrants, and when migration comes back in, the apartment market is what they're going to be hitting the most, and affordability. So places like Brisbane and Melbourne. So that's going to be a big push and stimulus for that part of the market. Students, there are tens of thousands of students that haven't come into the country again. They suck up the apartment market. They push the rental price and property prices up because a lot of international migrants want to be buying homes for their students. And then tourism. So once tourism opens back up, again, Brisbane, Melbourne, and Sydney, what happens is a lot of the apartment market in particular gets sucked up for Airbnb. And when all these properties disappear in the places like Paddington or Fortitude Valley or Collingwood or Essendon, you've got a huge shortage in the amount of apartments that are available in the market, which then in turn makes the rental demand even higher. So then you've got this huge amount of growth that we're going to see in the affordability in the apartment market and in townhouses. So that just further pushes rental yields and the amount of cash that people can get back for rent.
It's interesting. I think it's important what you're saying about the borders as well. And just looking how strong the Australian economy's gone with closed borders, completely sealed off. I think I got a stat sent to me the other day, don't want to quote on it now, but it was a GDP ranking against the other top 7 nations pre-pandemic times. And all the other 6 are below the 0% mark, and then Australia, I think it was just over at 0.9. Don't hold me to that number, but they've done well throughout the pandemic with those borders closed. So it's going to be interesting to see all that demand that is wanting to get into Australia at the moment, when we do open those borders, the effect it will have on everything really. It'll be interesting to see and good to see. I think good for Australia, and it's an integral part of the way kind of the economy works in Australia, so to speak, and the fact that they're so resilient now and doing so strong, it's going to be interesting. It's going to be interesting to see what happens. Do you think there could be? It's hard to say. You don't want to say it, but are we in a boom at the moment? I think we're definitely in a boom, but is it a boom that's never? Can you see an end to that boom, or can you just see it keep on going, keep growing and growing, getting bigger and bigger?
Good question.
It's a hard one,
we're definitely in a boom. We're now past. We're now hitting new heights. Like the last boom was 2017, 18, 2016, 17, 18. We're now past. Price growth is above that. I think that we're going to see continued price growth, albeit a little bit slower in some states and some regions. But there are parts of the market that are falling behind or that haven't quite hit yet, and there's certainly quite a lot of opportunity. Again, just because, as we said earlier, as borders open up, it's going to be very interesting. One thing that we're also watching, paying attention to, is commodity prices. So, some of our major exports are coal, iron ore, gold, natural gases, silver. So we're paying attention to commodity prices and then the implications of ramping up production in different mining towns or even cities more specifically, because I don't really want to pay attention to mining towns, but places like Newcastle, seventh largest city in Australia, having a look at Western Australia, what opportunities exist there, maybe even little, maybe even like not regional opportunities, but suburbs on city fringes that are 30, 40, 50 kilometres out of Sydney, CBDs, where we can go find good quality opportunities for as low as sort of $400,000-$500,000. So, that's the other thing, that Aussies earning pounds got that conversion rate all the way back.
Exactly.
You can pick up some cheap stock and
you're
to
going to
answer your
benefit
question,
from the same rental
we're at a
yield
boom.
as well.
Say it again?
Yeah. And you'll benefit from the same rental yields that you get almost in a city property as well, buying in a regional, town, so to speak. It was a bit different 5 or 6 years ago during that first initial mining boom. Our family bought a number of properties up in Mackay and Emerald and up north near the mining cities. At the time, there was that boom going on and it was awesome. And that was great. And I think that was what happened in that 12 months time was very unfortunate, and the way in which the market behaved in those areas with the mining boom gradually dropping off. But that was an interesting time. Mum bought a number of properties up north, and the rental yields on some of them were ridiculous. And these miners were getting paid good money to fly in, fly out, and live in these regional towns, so to speak. And then the effects of the mining boom ending, obviously that was catastrophic, and I don't think something like that will probably happen again in Australia, touch wood. But yeah, seeing the effects that one industry can have as a whole, on an entire market, so to speak, at the time, which was that property investment market in the mining towns. But it comes back. It's the cycle. It's cyclical, and it will always bounce back.
Good point. So actually, this is one of the reasons why we don't invest in regional cities specifically, smaller regional cities. We try to stick away from them because they are dependent upon one or two key growth drivers or economic growth drivers. Now, we are paying attention to commodity prices because we know that it's going to be a stimulus, but we are not solely dependent upon them. So, for instance, let's use Newcastle as an anecdote. Newcastle it certainly is impacted by coal because you've got all of Muswellbrook, Singleton, you've got all the Hunter region. But you've also got Newcastle as a city evolved a lot because it paid attention to the fact that it was dependent upon coal back in the 90s when BHP closed down. The city was basically in ruin. I think it went up to like 12 or 13% unemployment. After that, they spent a lot of money diversifying themselves, investing in education, investing in tourism. They create a whole new port there that's opened itself up to tourist boats. They've recently opened up again they've got the Royal Australian Air Force there. They've just spent a whole bunch of money on the Air Force base. But most importantly is that the airport has now opened itself up to international tourism. On top of that, you've got the Hunter Valley, so that whole area where it's wine, it's tourism, it's agriculture. So we look at cities like that can be impacted by commodity prices, but are protected against the downswing because they've got a whole bunch of other varied opportunities. Not to harp on about Newcastle, but they've also got education. They've opened up a whole bunch of university campuses and spent money there, and they've got more money going in. And then they've also got healthcare. You've got the John Hunter Hospital and there are thousands of people that are employed by the hospital. So,
Sure.
Good point, Chris. I think some people took some really big risks going to regional cities, but we want to pay attention to cities that are more robust than just, the one-trick pony.
Exactly. You can't just what's the saying? Look for the silver lining. It's not always going to pay off, you could say. I guess looking at it now, though, if you were to give a suggestion as to where you would recommend investing back in Australia, what's your kind of number one hotspot at the moment, or state, so to speak, as well? Obviously, we've got the grant in Victoria, and that's ending at the end of this month, or a couple of weeks now. But if you were to pick an area that was really standing out to you at the moment, what do you think would be the one?
Another good question. In fact, the lads and I, the investment specialists, and I were talking about that just earlier today. There are a lot of good opportunities out there, but it really does come down to, the investor. As you and I both know, everybody's different. Everyone comes with a unique set of, their budgets, their risk tolerance, what their strategy is. Are they after cash flow? Are they after growth? What's their income parameters? What kind of a deposit have they got? Depending on how much they can spend, there are some really, really nice, say, 4-story townhouses in Melbourne that are 6 or 7 kilometres out of the CBD, rooftop garden, underground private garage, stunning project in an area called Ivanhoe, where they're sort of 850 to 870 odd thousand, but your nearest competitors are almost $1 million, right? So that's a lot of money, though. However, some clients also love there's some stuff in Melbourne, which is sort of West Melbourne, where we're working at the moment, sort of 20, 30 kilometres out, 45 minutes on a train to the CBD, where you can buy beautiful townhouses or houses between 450 and sort of 550,000. You get a good piece of dirt. You've got a brand new train station in there. You've got the upgrades that's going to the train station that's going to the airport. And then there's huge amount of population growth, nearly 3 times the amount of the state average. And it's hard to look past Brisbane as well. I mean, as a long-term opportunity, I did some cash flows today where a client was looking at a $470,000 property. You're putting in 20%, so about $90,000 to $100,000 Aussie. And that property pays itself off principal and interest repayments. The rental returns about 4.5% to 5%, and it basically it costs you nothing. And if it grows at sort of 3 to 4% per annum, that's a free equity uplift. It's costing you nothing and it's growing.
Exactly.
And I like the outlook. The area that we're investing in, there's $1.5 billion being spent in a massive sort of master plan commercial activation for a logistics centre. And also, you've got potentially the Olympics in 2032.
Yeah, very true.
I don't know, mate. It's a broad question. There's lots and lots of property.
That's very true. It's hard to pinpoint one, I suppose. It always is.
Yeah.
Especially when you're so engrossed in it every day as well. You just love them all. You just want them all.
Yeah. It's like, what's your favourite kid? I don't know. I want to buy one of each, but I don't have
exactly.
cash.
Let me have them all.
Yeah, I'll give Charlotte a heart attack if I say I want to buy another property. I think we're settling one in 2 weeks, so she'll murder me.
There you go. Yeah. Keep you in the good books, mate. Stay away from that and wait a bit longer. Interesting. So I guess what we're looking to. At the moment, I was reading something this morning actually, just talking about the amount of UK expats that are moving to Australia to buy these investment properties, and they're saying at the moment, I think it's about 30 to 40,000 UK expats are moving to Australia, migrating to Australia, you could say. Obviously at the moment it's a bit more difficult, but this was pre-pandemic stats, and they're looking at investing in these markets now, buying an investment property and then finding themselves something to rent on the beach or on the coast and live the Aussie lifestyle up. And I guess you've spoken about it in the before in podcasts, and it's the Rentvesting and live where you want to, or rent where you want to live and buy where you are going to
you can
afford exactly. Yeah. So it's interesting to see that it's not only the Aussies essentially trying to get back in or reinvest back into the country, but you've got a high demand of British, and then you've also got obviously the Asian market. They're not there at the moment, but they're also a very integral part to it. And I guess it goes back to the question of when our borders open, seeing the effect of that, and hopefully demand continues and the overpricing scare isn't playing people's mind, I'm sure touch will be fine, but I think it's going to be a very strong market once those borders open.
Well, mate, I don't think the market's overcooked. I think that it's fair value, and I don't think it's overcooked because it's internally stimulated. And back to your statement about Rentvesting, rent where you want to live and buy where you can afford. I think that an expat is the perfect anecdote for that. Like, my brother lives in London. I lived in London. I love it there. That's why we've now got the business there. I love the city. I can understand why guys, girls want to live there. I've got a lot of friends over there, and they all ask me, what should I be doing with my cash? Should I buy something here? Should I buy something back home? There are just so many tax implications. There's hereditary things, like if you eventually die, what happens when you pass it on? There's income tax things that you should got to take into consideration. It's a very complex topic, but this is why we're doing what we're doing. I think that live in Mayfair if you can afford it, or live in a nice spot where you love, and put away a couple of the bucks that you're earning and buy an investment back at home. So you got that tie. Yeah. When you come back, you would have grown, and you've not pissed it all up the wall, for want of a better word, And
it makes sense. Whilst you're over here and earning great, strong British pound, you take that back home and play the currency play on it, and it works out very, very well, nicely for you, essentially, if you've got that pound sitting in the bank. So, and best than sitting in the bank, may as well have it put away somewhere. I guess I'm not an expert or a financial advisor, but a good thing in the UK is we've got our ISA account, so you can nominate or don't put in £20,000 a year to that, and that's tax-free money. All earnings on that are tax-free. So say you were saving away, putting your money in your ISA, pull that out by the time you get back to Australia and invest it in your investment property, and that's could be $45,000, which is a deposit. So it's a good incentive in a sense to helping you buy your first property or get on the ladder. And you're seeing a lot of people join these ISAs now and start saving. I think the mindset of people my age as well is starting to shift, and people wish that they'd been able to buy a property 5 years ago when we were 20, 21. And it's interesting to see now. We look back on it, and at the time we're like, I'm never going to be able to do that. But it doesn't take as much as you think, I feel, to get on the ladder. And now that I've started knuckling down about it, and you're convincing me day after day, and I'll have the first one very soon, hopefully. But I'm very close to that goal now, and it's something once you put your mindset to, I feel you can make it happen. And it's just not sitting around. Why wait? There's no point in waiting for it. You may as well make it happen now and do something about it. So that's kind of my mentality on it now.
Well, mate, grow your way to your next investment, right? And exactly. The thing is that the stuff that we're looking at, you can buy something off the plan, you can put a 5% deposit. So if it's a $600,000 asset, it's a $30,000, $60,000, 10%, 5% is $30,000. So what's that, like £20,000? You put that into it, you wait a year or so, then you can save your way to the remainder of that 5%, and then you're in, You're
saved, you're done.
Well,
interesting,
mate, I'm looking forward to all the content that you're going to be pushing out. This is a very complex topic. Yeah. I've seen the roster. You've got tax accountants, you've got financial planners, you've got migration agents, you've got all sorts of people that are going to be adding to this podcast. Hopefully I get another Guernsey and I can jump back on the show again.
We'll get you back on for sure. We need you on it. It'll be good. It's been a pleasure to have you on it too, and get the first Wealthi Expat podcast done with you as well. The first of many, and I look forward to hopefully getting you over to the UK as soon as these borders do open as well. You have to come
as soon as I open up, I'm there.
Come and live the London life for a little bit. It'll be good. But thank you very much, Dom. I appreciate it.
Absolute pleasure.
Cool.